In today's video, we'll be speaking about how you're supposed to be placing your stop loss to avoid market makers' manipulations. We spoke about this in the past already, but I get asked this a lot. How can I actually place my stop loss to avoid getting hunted? And that is exactly what we'll be speaking about in this video, so I suggest you watch it until the end because it will be filled with value. Now, if you're new to the channel, I'm a top author on a trading platform and I share free education and analysis each and every day on all my platforms. So I invite you to go and subscribe, and I will see you in the video. Okay, so as an example, to understanding where you're supposed to be placing your stop loss, we will be taking the Euro GBP trade that we just basically took this week with students and understanding why our stop loss was exactly at that level. Now, there are many reasons for which we were looking at this setup to the upside. I made a full analysis on Euro GBP on TradingView when the market was around this area, and maybe I did it also on YouTube, I don't remember, but anyway, the links will be in the description so that you can go and check the analysis basically when the market was around this area. But anyway, I will quickly recap why we were looking at this long position, because anyway, it's valuable, okay? It's good education to see why we were looking at the trade to the upside, and then we'll be speaking about why our stop loss was at that place and understanding the reasons behind, in general, placing a stop loss at an intelligent level. Now, here from the daily time frame, why we were looking at a long position, because clearly we had a market that had created this very nice M formation, and basically it was clear that inside of this zone the market was basically creating an accumulation area. After they moved to the downside, and basically completion of the M formation at this previous resistance here, now turns support here, the market started in accumulation area, basically chopping sideways. Now this is exactly what the market does when big banks and institutions are basically loading up their positions, starting to sell the pound and buy the euro. That is exactly what they do, and in fact, you can clearly see it reflected in the price action. Sideways movement with deceleration, indicating that sooner or later the market will start the next move to the upside. So already from the daily M formation, previous resistance turns support and accumulation area. Immediately from only the first time frame that we checked, we already knew basically three reasons for which we could definitely be looking at possible continuation to the upside. Before we go and see what we had on the weekly time frame, let's go and see what we had from a COT perspective. So what hedge funds were doing on the pound and what hedge funds were doing basically on the euro. So what we can see from a pound perspective, we can clearly see that hedge funds were selling and are selling the pound aggressively. How do we know that? Very simple. Look at the net positions. We went from 35k net positions all the way down to minus 12k net positions, okay? So from a situation where we had longs outweighing the shorts, we went now to a situation where shorts are outweighing the longs. In fact, what we can see currently, when we had the position, we had 40k shorts and 28k longs, and now it's even better, because now it's 45k shorts and 31k longs. Now, what are these orders? These orders are the COT data, so the commitment of traders, what hedge funds and basically big speculators in the market are doing. Their positioning in the market is called a commitment of traders. And basically, it will help you understand where the big boys in the market are positioned, and you can be trading alongside with them if you can combine what you read on this data and what you have on the chart from a price action perspective. So everything, as you can see, was indicating for pound weakness. So we wanted to see the market make a move to the upside on Euro GBP, because also from a Euro perspective, what did we have? We clearly could see that we had negative net positions at minus 114k net positions that were building up pretty aggressively from minus 114k all the way up to plus 87k, and currently we are now sitting at 78k. So we went from having way more shorts than longs to having way more longs than shorts. In fact, we currently at the moment have 171k long positions and 93k shorts. So strong euro, weak GBP. Again, more confirmation for the move to the upside. It basically combines with what we already have from a daily perspective. If we check the weekly, what we can see on the weekly. Just a quick reminder, make sure you comment below and you let me know which pairs or topics you would like me to cover in the next video. On the weekly time frame, we can clearly see that the market had created this beautiful impulse followed by a correction, and you want to see the market at least to try to make another impulse to the upside. And even more confirmation, if we want informations on a retracement, we simply have to take our Fibonacci from the low to the high of the impulse, and what we can see that the market has clearly gone to retest the 0.618 Fibonacci retracement, and from here, since this is also the golden ratio, you expect the market to make a move to the upside and basically reject that zone. So everything on all time frames, basically including COT data, was indicating for a move to the upside. So since everything is indicating for a move to the upside, basically that is exactly what we were looking at from a 4-hour perspective. We were looking for a potential longing opportunity with students with a good risk to reward and good probabilities for a nice move to the upside. Now, you might be asking yourself, why did we execute the position exactly here, and why was our stop loss exactly here? Now, the reason for which we had our entry at this level after this candle here, that I can't share, okay? Because it's part of the mentorship program, and I deleted, in fact, all the analysis basically here from a 4-hour perspective. I deleted everything. So you won't understand basically why my setup was exactly like this from an entry perspective, but I will explain why it was like this from a stop loss perspective. Now, from an entry perspective, I can't share. And from a take profit perspective, I can share. Why the take profit was exactly there? Because what do we have here? We have the neckline of the information that we had identified from a daily perspective. So the completion of the information is here at the neckline, and that is why our take profit, it basically is there. But the reason for which our entry is here, I can't share, but let's speak about the stop loss. Why was the stop loss here? Okay. Now, when you're placing a stop loss in the market, what are you actually doing? You're saying, if the market reaches this level, I don't want to be in the trade anymore because I basically have the market has higher probabilities of continuing to the downside and basically the setup to fail. Therefore, I don't want to be in the trade anymore. So your stop loss in this case needs to be at a level at which basically the setup is invalidated. And why in this case, basically the setup was invalidated if the market would have reached our stop at this level? Because if the market actually reached the stop, and as you can see, we did have basically some movement to the downside against us before the market basically exploded to the upside in our profit zone. Why did we have our stop loss here? Because many reasons. First of all, we have this counter trend line. If the market will manage to reach our stop loss, this counter trend line is broken to the upside, therefore now acting as resistance. And at that point, we have more probabilities of the market to continue lower and basically to go for a stop hunt of all the stop losses that are below this level. So at that point, we don't want to be in the trade anymore, and we will be looking again for a re-entry after basically the market will have, for example, showed us that it's ready to continue to the upside. So one reason, counter trend line. Second reason, clear support at this area. We have support here and we have support here. If the market will reach our stop loss, it basically means that it broke this support to the downside, and previous support is turned resistance. So we don't want to be in a market that is basically below resistance and remain in the trade. We want to exit the position, cut our loss, and basically we will re-enter the position again with great risk to reward and great opportunity. But if you have a big trade like this, okay, 1 to 4 risk to reward, even if you lose one trade before banking the 1 to 4 risk to reward, you're still making 1 to 3 risk to reward. You're still making 3R, okay? That is basically the power of having high risk to reward trades. So you don't, with a 1 to 3 risk to reward, and this is 1 to 4, you only need to be right 3 times out of 10 and you're still in profit. So even if you have a terrible win rate, which by the way is very hard to have 30% win rate, you will obviously have higher, you're anyway in profit. And that is how you can be sure that you're always in profit in the long run. So always remember, be able to identify structure and basically always place your stop loss at a level at which if the market reaches that level, the setup is invalidated, okay? The market has higher probabilities of continuing to the downside against you. So you are happy to be out of the trade, you are happy to lose the trade because it means that the setup from the first place basically didn't work. And basically in this kind of situation, unfortunately, I can't share with you exactly why we entered here and why not, for example, on the retest of this structure. The reason is, in this case, the reason is actually very simple and is connected to the daily time frame. But here from a forever perspective, there is a thing that is called environment of the market. And we always wait for the environment of the market to shift because it indicates that the accumulation phase is over. So we were simply waiting for the accumulation to be over and then we could enter the position. And we in fact were able quite accurately to identify when the accumulation was over. Not perfectly, because basically we did have this minor drawdown before the market exploded to the upside bringing us in profit, but we were quite accurate in identifying when the market had basically completed the accumulation and was possible to start the move to the upside. If you enjoyed the video, make sure you smash the like button and comment below. It really does support the creation of more free education and analysis for all of you. Also, make sure you go and check out the mentorship program. You find the link in the description. It's a very complete program. You first learn all the rules of my strategies and then you trade them live with me. Each and every day, I give you a new daily market breakdown showing you exactly how to apply the strategies with entry, stop, and take profit, as well as having me answering every question that you have each and every day. So I suggest you go and check it out or go and check out the next video.